I'm not recommending that people buy stocks today or tomorrow or next week or next month, but you shouldn't buy stocks unless you expect to hold them for a very extended period and you are prepared financially and psychologically to hold them the same way you would hold a farm and never look at a quote. You don't need to pay attention to them, and you're not going to pick the bottom and nobody else can pick it for you or anything of the sort. You've got to be prepared to, when you buy a stock, have it go down 50% or more and be comfortable with it. There have been 3 times in Berkshire's history when the price of Berkshire stock went down 50%. 3 different times. Now, if you owed it on borrowed money, you could have been cleaned out. There wasn't anything wrong with Berkshire when those 3 times occurred. But if you're going to look at the price of the stock and think that you have to act because it's doing this or that, or somebody else tells you, well, I mean, how can you stay with that when something else is going up? You've got to be in the right psychological position. And frankly, some people can handle it psychologically. If you can't handle it psychologically, then you really shouldn't own stocks because you're going to buy and sell them at the wrong time. And
all of these economists with 160 IQs that spend their life studying it, can you name me one super wealthy economist that's ever made money out of securities? You know, I mean, just go down the list.
No.
No, Keynes actually, in his early years, tried to make money in stocks by predicting what business would do, and he gave it up. And then he went over to a Graham-type approach. I mean, it's very interesting to read his history on this, because he thought he could, by looking at various economic variables, pick what he called the credit cycle and make a lot of money. And he went broke a couple of times in doing it, had to borrow from people. And then he settled on buying good businesses cheap that he understood and concentrating his investments. And he did very well. It's an interesting history. But if you look at the whole history of them, you know, they don't make a lot of money buying and selling stocks, but people who buy and sell stocks listen to them, which is, I have a little trouble with that.
Biggest mistakes people make when investing?
well, they try to, they just don't realize that all you have to do is just buy a cross-section of America and then never listen to people like me or read the papers or do anything subsequently. They think that because you can trade, you should trade. You buy a farm, you buy an apartment house, you can't resell it tomorrow, and you know the cost of moving around. Or now you get something handed to you, liquidity, which is instant. You can sell, and the cost of doing it are pennies, compared to other kinds of investment activity. So because they can so easily move around, they do move around, and moving around is not smarter than investing.
How wealthy are you? I mean, I'm reading that you're $77 billion.
99% of my net worth is in Berkshire Hathaway stock. Every share of that stock has been pledged to philanthropy. So I'm a trustee for that stock. So it'll go to society. And then a good bit of the rest will as well. But if you add up what's in my name, if we go down to my safe deposit box, we will find some stock certificates that are worth that much. But as I've written, they have no utility to me. They can't do anything to make me happier. I'm already happy. I'd be happy with, certainly with $100,000 a year, I could be very happy. And they can't buy anything for me.
Do you have any stock tips for me?
Well, just between you.
Yes. It'll be our little...
The average person will not know enough to know which stocks to buy. They won't know enough to know when to buy them, but they don't have to, because if they can buy all of America through an index fund, and then they just have to be sure they don't jump in at exactly the wrong time, and they won't know what's exactly the wrong time. So therefore, they should put their money in over a period of time, and they'll have some periods that are wonderful and some that weren't so good, but overall, they will do fine over time.
Warren Buffett does not buy stocks. Every company Warren Buffett has ever invested in, from Coca-Cola to Apple Computer, he was taking a major position in a company, not in a piece of paper. And all those companies have one thing in common. What do you think it is? Cash flow. He didn't invest in Apple Computer until their cash flow was so stable. He's a coward investor. He wants to buy real companies that have real assets and the cash flow. He wants a check every month. If you don't find a way to make money while you sleep, you will work until you die. In my case, I'm going to work until I die, and my money will work after I die.
Well, when we looked for these subprime, the reason why we shorted the subprime and size because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of Treasury. So you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount.
But when I got into Wall Street, I had 12, 15,000, which was a lot saved, I started investing it. And in '61, the market was hot, and you never really. I learned a lot from that, because you'd never confuse a bull market with brains. And what I did was confuse it. And I'm buying all these stocks. I'm picking this and I'm picking that. And I had a following of people would listen to me. Oh wow, well, you could. But everybody was making money. You don't realize that. And Jack Dreyfus would tell me, he'd come over. He'd sort of like me. He'd sit there with me once in a while, and he said, "You're going to lose every penny you have. I'm telling you, Carl. Before you're through it," he said, "I got this." I was up to about $70,000, which was huge. He says, "You know what? When this is over, 6 months, a year, maybe less," he says, "not only won't you have the 70, you'll be negative everything you ever had." And he was right. In 3 days in '62, they cleaned me out. I was and I learned. I tell you what I learned from that experience.
You didn't learn from him just giving you the advice. You had to go through the pain.
You had to go through the pain. You have to go through it. The market is not a gambling casino, and too many people.
Warren Buffett does not buy stocks. Every company Warren Buffett has ever invested in, from Coca-Cola to Apple Computer, he was taking a major position in a company, not in a piece of paper. And all those companies have one thing in common. What do you think it is? Cash flow. He didn't invest in Apple Computer until their cash flow was so stable. He's a coward investor. He wants to buy real companies that have real assets and that cash flow. He wants a check every month. If you don't find a way to make money while you sleep, you will work until you die. In my case, I'm going to work until I die, and my money